Hello, everyone. Welcome to Summus Capital Investor Webinar. Summus Capital is one of the leading commercial real estate investment companies in the Baltic region with a property portfolio with a market value of over 500 million euros. The company has been on the market with bonds since 2021, and now it's coming to the market with a third bond issue. And for the first time, they're doing a public bond offering. Today with us, we have a Summus Capital management team, Avo Koppel, Hannes Spiel, management board members, and Olga Kozina, with the transaction manager. And without further ado, I give the floor to Avo, who will guide you through the investor presentation. And after that, we'll have the opportunity to go through the Q&A. So I just kindly remind you that you have the opportunity to ask questions through the Q&A box. So thank you. And Avo, please go ahead.
Yes, hello. Thank you very much for joining us. So we are three here from Summus today. It's me, Avo Koppel. I'm responsible for finances. Then we have Hannes Spiel, who's responsible for strategy, and Olga Kozina, who is our transaction manager. To look back in history, then it was about 11 years ago, about the same time of year when the Summus did the first acquisition, which was a building in the very middle of Tallinn Old Town. And at that point of time, we had a plan to build a diversified portfolio, and we thought the size should be around 100 million euros. So let us see where it has taken us today. Today, Summus Capital is a leading real estate holding company with a diversified portfolio across all the Baltic countries, and recently we also entered Poland. We currently have in our portfolio 15 different properties across all the different markets. Our property value is about 500 million euros. Our properties are certified, proving they are in really good quality. Financial-wise, we are well financed. Our equity to assets ratio is 34%. And we are generating over 31 million euros of EBITDA. And to stress our strengths, we also have received a rating from international rating agency Scope, which is BB and stable. Why to look for Summus? We have a diversified portfolio. We look for different properties, and the portfolio mix has to be balanced. We, of course, have our favorite segments like retail, for example, but there has to be a balance. We are not going for just one asset class. We are generating strong cash flow, and what's most important, we have a non-recurring monthly cash flow. And it gives us quite a nice returns. So our cash on cash yield last year was more than 9%. So that would be higher than the bonds ever have been. We have a good mix of tenants, a large number of international tenants, and our occupancy ratio is rather high. We have been growing. Within the last 6 years, we have been growing more than 2.5 times. And if we look to the end of last year, then we increased our portfolio by almost 1/4. And we are focused on having a proper properties with a ESG focus, everything being streamlined. The balance sheet is strong. We have a 34% equity as of year end, which has been increasing during the first quarter. And our financials are according to IFRS, and they are audited by KPMG. And Summus is led by experienced management team. We have an in-depth knowledge of real estate and financial markets for more than 24 years in the Baltics. So what do we look at? We are a cash flow generating commercial real estate investor. We do not develop ourselves unless that will be a part of our, let's say, change of strategy for our assets. We are looking to the Baltics and just recently entered into Poland, which we find is a very interesting market. Our investment horizon has a long term, which means we do not have any time to conclude an exit, unlike funds, for example. And we diversificate. We look at Class A office buildings, shopping centers, big box stores, warehouses, industrial properties. We have the freedom to structure the transactions as we like those. So we have been using sale and leaseback transactions. We have pre-agreed certain acquisitions at certain conditions and pre-financed some of our acquisitions. So we are free in that sense. And we look for efficiency. As we do not have any specific end date or exit plan that has to be followed, then we need to look on properties which really deliver and are efficient in a really long term. And we can do the value-added commercial real estate investments, which means we can shape our portfolio. We can change the concepts if we so decide, and if it becomes more efficient. We can add cinemas to our real estate properties and so on. The main requirements for our portfolio is that it should be diversified in different commercial real estate sectors. And this has found very good proof for us during the COVID times. When we had a diversified portfolio, which actually, as a result of this, we didn't really lose too much. And the other cornerstone of our portfolio requirement is the anchor tenants. So let's say in COVID times, the anchor tenants also in the retail sector kept us on a good level. This is our history. Started all back in 2014 with the first acquisition, and then we were focused on Estonia. In 2017, we took the next steps to enter Lithuania. In 2021, we entered Latvia, and just recently, in the end of last year, we took our first steps in Poland. And as one can see from this chart here, then after making the acquisitions in one market, it has been stable for a while. We have been working with the market and then have taken the next step. And this is the history of acquisitions, but you can also see we have two experiences of disposals. So there was one asset sold in Estonia in 2022. And just recently, in this year, we also disposed another asset in Estonia. This is how we work. Our structure is pretty straightforward. Summus Capital is the holding company, and it is also the bond issuer. And under Summus Capital, we have each of the properties in its dedicated SPV. And for the SPVs, in some cases like Latvia and Lithuania, we have also created an holding company in between. That is our management. We have a supervisory board consisting of different experts from different markets and different knowledges. And then in management board, we have Hannes, who is responsible for strategic. Then I am responsible for finances, and Evaldas from Lithuania is responsible for assets. And I would give word over to our transaction manager, Olga Kozina, here to cast some light on our portfolio.
Okay, thank you. Hello to everyone. Do we see the slides?
Do you see the slides? I have it in front of me.
We do.
Just a second,
You do.
because I see myself. second, I cannot see it. Okay, so from the very beginning, as Avo mentioned, so we decided not to stick to any single asset class, as well as to carefully select the properties to ensure both sector and tenants diversification. Thus, our current portfolio represents retail, offices, industrial, and logistics properties. And as mentioned already, over a decade, we ensured a stable non-leverage asset yield on level of around like 8.5%, which is far above the market yields in Baltics. So these slides, which you see at the moment, demonstrates the breakdown of our portfolio, which at the moment consists of 14 properties worth more than €500 million. Our team follow up markets as well as work out tailor-made transaction structures, which allow to utilize us the utmost of windows of opportunity on the market at the moment. So a good example here to demonstrate our transactions is our recent investment in Poland, where we bought an office building in a secondary city of Poland with a population of around 6,000 inhabitants, which is comparable to our capital cities. So this is this city has very diversified production and businesses, and is one of, let's say, the spots for shared service centers from, let's say, of global companies who are coming to open back offices in there. So we bought this brand new BREEAM Excellence certified building of around like 15,000 square meters, EU taxonomy compliant, ESG compliant, fully occupied for around like 33 million euro, which you can compare to another property in our portfolio in Lithuania, which is of the same size, like 15,000, yes, so Parktown East, which is valued at the moment at around 49 million euro. So we bought a comparable building with similar and very strong cash flow generated from very stable anchor tenants. Like most of the income there comes from the leading commercial bank related to the government, and we bought it at a much lower capital value per square meter, thus ensuring our investors high return that is possible to, let's say, to get at the moment in Baltics. Next slide, please. So, as Avo mentioned, we undergone significant portfolio growth over the years, which was not linear, of course, but now we are looking for the next step to be fueled by this current bond issue. So if we go deeper in details, then given the structure of Baltic economies, where spending, let's say, makes the biggest share or is the main driver of economy, so one of the most important sectors on our radars was and is retail sector, which for our professional team allows, let's say, through an active asset management, to increase cash flows of properties and to enhance the value of assets at utmost. But of course, we have offices and logistics in Baltics, where the growth is a little bit more narrow, and more tied to, let's say, to indexation-led growth of both cash flows and investment values. Next, please. So I believe, So our geographic spread, as you could see already from, let's say, from previous slides, is quite even spread across countries. So as part of our diversification, we at the moment entered Polish market, where we already have some 20% share. Since our first acquisitions in Estonia were made more than a decade ago, as Ava mentioned. So we took opportunity at the moment to exit some properties, some older properties. I should mention, that we exited at very favorable terms, ensuring our investors more than 20% of internal rate of return. And thus we are also gradually substituting older stock within our portfolio with more modern and more sustainable properties in line with our ESG strategy. So, yeah, you can, if we talk about the particular properties, so you can see our portfolio started to, actually, it's difficult to see. I again lost the slide. So we actually we started with acquisition of a signature property in Old Tallinn, which was retail building De la Gardie. Then it was followed by some industrial and logistics, like stock offices in Estonia. We also own at the moment shopping center Auriga at Saaremaa, where we are in essence monopoles offering such a shopping experience to our customers. We have exceptional medical properties, which again, we were kind of pioneers on the market with such transactions for very stable and sustainable type of investment. Next slide, please. Riga's portfolio is currently represented by 3 retail properties. The biggest of them is Riga Plaza, which was bought in essence half empty, and during last 4 years, so was brought to 100% occupancy and actually even waiting list of tenants. So hopefully in a very short time, we will be able to announce publicly our expansion plans on this asset. And we have 2 more retail assets. One of them is DIY, Depot DIY. Another one is a very stable and very popular neighborhood shopping center, Dame. So again, you can see that retail properties still constitute biggest portion of our portfolio. But still, let's say this retail sector is also diversified by subsectors, including single-tenant do-it-yourself stores, shopping malls, as well as convenience and neighborhood retail. Next slide, please. I beg your pardon, I don't see slides. Okay, yes, I see. Lithuania.
Yes.
So, Lithuania. In Lithuania, we acquired shopping, industrial, and A-class offices, high-class offices, and acquisitions there actually were already characterized by tailor-made structuring of deals, including forward transactions, where we bought a property from a developer before, let's say, its completion. By another transaction was a sale-leaseback transaction for research and development center. And it is worth mentioning that we were again kind of pioneers on the market for forward transactions, and thus we ensured our group access to the properties before they came to active marketing stage, and consequently securing higher than average returns for ourselves. Next slide, please. The most recent transactions, of course, our outstanding A-class office buildings in Poland. Both are very new, modern, up to date. So one is BREEAM Excellent, one is BREEAM Outstanding. Both are anchored by grade A tenants, like one of the leading healthcare services providers, LuxMed. Another building is anchored by the bank Pekao, which is one of the leading local banks, partly owned by the government. Other tenants include such tenants as HP, Hewlett-Packard, Tetra Pak, Bonduelle, etc. So we managed to ensure approximately 7.75% yield for Warsaw asset and around 8.5% of transaction yield in Łódź. Thus ensuring around like 150 to 200 basic points higher returns that we currently could get in Baltics. And as mentioned, yeah, so properties are very, very technically advanced. Yeah, so we even cannot, let's say, get comparables in Baltics for such a quality. Next slide, please. So yeah, since real estate is infrastructure for the business, yeah, then of course key feature of our portfolio healthiness is of course our tenant base, its diversity, credibility, and the lease covenants. So as you can see from the summary in this slide, yeah, we at the moment have more than 435 tenants with anchors ensuring more than 75% of the cash flow generated. Actually, our historical occupancy rate was more or less over 97%, which is demonstrating kind of rotation allowance vacancy, which just ensures us the flexibility of active change of an improvement of tenant mix. So we try to, let's say, to introduce new concept to our customers. As mentioned, we have some tenant waiting lists for retail properties, for instance, and yeah, we plan to introduce some news on the potential expansion. As you can see here, average lease term within our portfolio is 5 years. This refers to unbreakable lease term. Yeah, normally the expiry of the contracts is even longer. Most of anchors are tied for 6 to 10 years, and as mentioned already, those anchors are generating 75% of cash flow, meaning that we are secured for 6 to 10 years for, let's say, at least with 75%. So yeah, and the reason, of course, let's say that one of our targets is to keep at least 50% of cash flow to be generated by anchor tenants is, of course, that anchor tenants ensure stability through turbulent times, of course, as those tenants remain more stable. They are stable payers, more resilient against the crisis. They are solvent and their business and solvency do not depend on, let's say, landlords provided discounts. So next slide, please. As you can see, yeah, so these are top tenant of our tenants, yeah, so which was prepared before the latest acquisitions of Poland. Yeah, so you can see very famous names like Soltec, Kesko Sinukai, Rimi, Depo, Apollo, Confido, etc. So this list is now being supplemented by such names as Bank of Pekao and LuxMed, as mentioned previously. Next slide, please. Yeah, a few words about the markets. So in Baltics at the moment, yeah, so we can see that the prime yields are not changing significantly. Yeah, so the market is not liquid enough to, let's say, to respond quickly to changes. We see interest rate decrease, but so far we don't see the change or shift in yields. So due to this, let's say, gap between yields between sellers and buyers, yes, so this gap actually keep the total transaction volumes low at the moment. Yeah, as already mentioned, our portfolio is worth more than 500 million. Yeah, and if we look at the current transaction volume. So of course, let's say our growth potential in Baltics was limited by the liquidity of the market, because when we see that our portfolio becomes bigger than some 30% of, let's say, of the total transaction volume on an annual basis, then of course we start to think about the liquidity. So that was also partly a reason for us to explore different markets. Yeah, we decided to go to Poland. It took us around like 3 years to get acquainted with it, to search for the good opportunities and to enter that. probably next slide. Yeah, and decision for, let's say, for entering Poland was made on due to the fact that this market is very dynamic, and even during the global capital outflow during last 4 years, yeah, so it reacted quickly and provided rise in transaction yields. So with prime yields bottomed as low as 3.5, 3.8% like 5 years ago. The current level of 6 to 6.5% actually provided a huge window of opportunity for us to, let's say, to buy at the very low of a market and to, let's say, to have a good opportunity for capital growth. So actually, this market has a very strong occupiers fundamentals. Yeah, so within all the sectors of real estate, as in other countries, yeah. So we understand that people will continue to eat and drink and to buy some goods. So we are looking very carefully for, let's say, for retail assets in there, and internal consumption, of course, is huge because the market is inhabited by some 40 million inhabitants. Besides, if we speak about other businesses, yeah, so both logistics and industrial are very, very active due to the fact that local businesses are very competitive, and Poland accelerates the production, and Polish companies are one of the most active logistics providers over Europe. So if we speak about offices, so occupant market, yes, we see that the local companies are growing, and we have a huge inflow of newcomers to the market, like global shared service centers who relocate the back offices to Poland, which is very favorable in labor and cost sense. So yeah, what we expect, of course, with such a strong market fundamental and the current yields, yes, so we expect a steady value appreciation for this market, expected actually based on both on indexation of rents following the GDP and economic growth, as well as on the yields compression following the transaction volume growth. Actually, the normal level of or average level of transaction volume in Poland actually counted to 7 to 8 billion euro per year. Yeah, so at the moment we can see it's around like 5 billion, so we have still potential to grow. And yeah, just to mention, economic growth of Poland during the last 30 years so was always positive, yeah, except one COVID year. So yeah, we believe it's a really good market where we can expand. And yeah, we invite you to be part of our growth, of the growth of our portfolio in there. Thank you. So yeah, probably I will pass again the word to our.
Yes, so we can see the cornerstones for our strategy. We continue to be open-ended, meaning that we don't have a hurry to sell something, we don't have a hurry to buy something, but we can do it when we decide it is favorable for us. We keep our focus on Baltics and Poland. We want our portfolio to be mixed use and diversified. And we want to have a large tenant base where we have reliable anchor tenants with more than 50%. And all this brings us to what is also important to us is the sustainability, the sustainable growth. So we are focusing to have our assets on top level streamlined. In our case, we are following more than 15 different parameters for the ESG palette. We have received a very nice level of 90% of certifications, which proves that our buildings are efficient and up to date. And it is not just about having the things on the paper, but with the efficiency, we have managed to save significant amounts in energy costs. So say in 2, 3, 4 years, we have saved 2.2 million on electricity only. And this is something which we share with our tenants and which makes us happy and them as well. And now let's have a short look into our financials. More detailed look you can have from our thorough annual accounts available on our website and Nasdaq. Last year, our sales surpassed 41 million euros, yielding in 31 million in EBITDA. But here one has to keep in mind that the last year results did not include our Polish volumes yet. So Poland was included only for half a month in December. Our properties balance sheet value is above 500 million euros, 509 million euros as of end of last year. And our equity capital formed 34% as of end of last year, which is an important measurement because we will have a covenant for the bonds that our equity ratio should not be below 30%, which it never has been. And another covenant for the upcoming bond would be the SCR of minimum 1.2 times. And as of year end, we were standing at 1.3, and we always have been above this 1.2 target. This is how our assets are financed. Equity is an important leg our portfolio stands at. So it was 34% or close to 190 million euros as of last year. With our interest-bearing loans, we are having a nice portfolio of different banks. We are having good relations with all the banks in the region, and our portfolio was financed by Luminor, LHV, Artea, and Citadele here in the Baltics, and Erste Group and Hyponoe in Poland. What is interesting about Polish market is that it's not only local banks present there, but also the neighboring markets like Austria and Germany are financing the assets there. And we have also a bond issue outstanding from mid last year with a nominal value of 50 million, and this forms just 3% of our total balance sheet. We want our interest risks to be handled. So as of the end of last year, 54% of our portfolio was either with fixed interest rates or it was hedged. And talking about the new bond issue, then the proceeds will be used to expand our portfolio. Quick look on our balance sheet side. So from the assets, we had 551 million as of end of last year, of which the properties were 509 million euros. And here on asset side, an important thing to see is other receivables, which includes VAT. As we did our acquisition in Poland as an asset deal, then we had to also pay VAT on top of the assets, which we later on claimed back from the state of Poland. And also to point out, in addition to cash and equivalents of 8.6 million, we have also short-term financial assets, which include 4.6 million in deposits for 12 months. Liability side, we have the portfolio of interest-bearing debts close to 300 million euros, including the bonds with nominal value of 50 million euros. And as of year end, we also had a short-term loan to finance the VAT payment in Poland. Our equity is close to 190 million euros and stands strong there. Profit loss statement, the sales was more than 41 million euros. Other operating income and other operating expenses include the revaluation of our assets, which total netted in 4 million euros positive result. Operating profit 31 million euros and net profit close to 13 million euros, out of which 11 million belongs to the equity owners of Summus Group. And a quick recap on the last quarter, which is the first quarter of 2025. Now we had the first quarter where our Polish acquisitions were fully included in the financials. And you can see that the sales revenues increased by 35% and operating profit close to 30%. The assets and liabilities decreased a bit as we received the VAT back from Polish state. And we also repaid the temporary VAT loan. As a result, our equity ratio was 36%. And one more thing to mention is that in May, we disposed one of our first investments in Estonia, stock office of Punane Street 56. And here I would give over word to Christiana, who would introduce the planned new bond issue in more detail.
Yes, let me briefly cover the key terms of the notes. The issuer is Summus Capital, the holding company of the group. The notes are unsecured. Since 2021, actually, Summus Capital has been rated by Scope Ratings and has a BB stable rating that has also been reviewed last autumn. The issue size is up to 30 million, and the key target is to raise the funds to finance potential acquisition of new properties. And as the company explained, they're primarily currently looking into Poland. The coupon rate is 8%. The coupon will be paid on a quarterly basis, and the maturity is 4 years. As this is a public offering, the minimum subscription is 1,000 euros, so offering a broader investor base to participate this time. For those investors who are familiar with the existing bonds, so basically the covenant structure and the undertakings are very similar to the existing bonds. The financial covenants are minimum equity ratio of 30% and the debt service coverage ratio of at least 1.2 times. And the company is comfortably observing these covenants at the moment. And then there are some, general undertakings like limitations of dividend payments, reporting obligations, and so on. And this time, the company plans to list the bonds on the regulated market in Tallinn. So that is, let's say, a step forward for the company in the capital markets journey as well. Signet Bank and LHV Bank are the joint lead managers of this issue, and we have a partner, Orion Securities, who is covering the Lithuanian market. Next slide, please. If we have one.
Let us see. It doesn't want to move, but let's see.
Yeah, just reminding about the timeline of the offer. So the subscription period lasts until June 20th. After that, after the midsummer holiday, the results of the offering will be announced, and the issue date is the 30th of June. And the company plans to list the bonds very shortly after the issue date, so early July. And the last slide. Yes, and how to subscribe. So since this is a public offering, basically the subscription process for every investor should be quite straightforward and simple. The primary requirement is that you should have a securities account. So basically you should contact your bank and take it from there. It should be possible to subscribe from almost any bank in the Baltic states. But in case you have any questions, please check the Summus Capital website. There are more detailed instructions, step by step how to subscribe, and don't hesitate to contact us or your bank. So thank you. And now I just give back the floor to Summus team to do some concluding remarks.
Shall we also look upon the questions that we have received?
Sure.
There are a couple of those.
Yes. We have a few questions from the investors. So let me start with the first one. How large might Poland become as part of the portfolio in percentage terms?
Maybe I will answer. Hello, also everybody. I'm very happy to share our plans here with the Summus family. Thank you, dear colleagues. Regarding Poland, as of the size of market, we can see in future that our portfolio in Poland will be somewhere between 30-40%. We definitely see there are a lot of possibilities. And actually, if I can add something regarding the near future, we already signed some LOIs regarding the next steps. One of them is pretty much the same leasable area as Riga Plaza shopping mall in Riga. Right now we are doing due diligence in Poland regarding shopping mall, 55,000 leasable. It's pretty new shopping mall. The tenant mix, especially the anchors, as you heard, this is our one of the main target and strategy to keep anchor tenants. Then in this shopping mall, we see a lot of similarities regarding anchors in Baltics. So we have plans not only in retail, we already discussing one possibility, not in Warsaw, but other regional city, brand new office building. If we can agree the exact entry terms with current developer, then we see this transaction at the beginning of next year.
Thank you, Hannes. So the next question is, have you ever looked into hospitality and data centers?
Data centers in Baltics, it's not already nothing actually. Then we should step in a Scandinavian market, but currently this is not our target market, let's say. And another part of the question was?
Hospitality.
Hospitality, yes. As operators and as a tenants in Baltics, they are not so profitable, actually. This is the main reason. And another reason why it's not so attractive for us, we see there is one tenant risk, actually. And that's why, and the low, actually, margin also. So that's why it's not in our target right now. But who knows, if we will see some interesting offers, then we can, of course, take a look.
Okay. The next, I don't really understand. It's just probably a comment regarding Łódź, the 600,000. So it's probably not a question. The next question.
Maybe just a very quick comment to that. It's
Yes.
not just Łódź itself, but it is the region. So I think
Okay.
around the region,
No.
within the 30 minutes drive, it is something like 1.2 and even more million people.
Yes, honestly saying, yeah, so for exactly Łódź as a city, yeah, so it's 665,000. Yes, so
Okay.
really big.
Moving on to the next question, what is the average dividend taken out of the company over the last 5 years?
There is one technicality that in our case, the owner has provided subordinated loan, which is considered as part of equity. So you shouldn't look only on dividends, but also the subordinated loan payouts, interest payments, and dividends altogether. We have a limit that we should not pay out more than 50% of last year's net profit. And this is also set by the bond terms. But historically, if we look on it, it has been between 3 and 7 million euros per year. For example, last year altogether was 3.8 million.
Can I add, actually, for bond investors, it's good to know, actually, if you're talking about as a dividend return or cash on cash yield, actually, from beginning, especially from 2021, it's always higher than 9%, actually. And if we looking our bond issue, for example, our first bond issue was coupon rate 6.75. The second bond issue was 9.5, and right now it's 8. So means we always have a higher cash on cash yield than coupon rate. So we always will have the real cash to pay coupon.
Mm-hmm. And in this case, one shouldn't mix with the dividends taken out from the company. The cash on cash or dividend yield in that sense means that the cash that property generates for us to the group, which then can be reinvested.
Okay, thank you. And the last question that we have so far is, how can you describe competition on purchases, on tenants, and for bond investors?
Hard to say. If you're talking about possible investors in politics, then most market players knows that currently it's most high net individuals who are ready to do higher yield deals in politics. Unfortunately, there are not so much possibilities to buy something. So yes, last year we saw something in Estonia, especially, but in near future we don't see so much competitors. We see that in politics nothing to buy, and that's why, of course, in Poland it's a lot of different possibilities, and there is no so much competitors right now. There 7 or 5 years ago there was all major international players at the market. Right now this is our market, let's say, and this is our possibility, and that's why if I should sum up somehow our strategy today, yes, we still see that portfolio split it's important. That's why we are looking retail, especially because we see that value add possibilities regarding retails, and also tenant mix is important. But as we already described, there is a lot of similarities regarding tenants in Poland and politics. So this is our possibility to use this momentum right now.
Thank you. Oh, yeah, the last opportunity to ask the questions online. Okay, I guess there are no more questions at the moment.
Yes, but thank you very much for joining our webinar. And please, if you have any further question, please get into contact with us. And please do not hesitate to come along and join our story of growth with stable cash flows.
Thank you. Thank you so much.